Welcome everybody to the Leaders in Housing Counseling call for March 3rd. We're very pleased. We're going to have we'll have a couple items that we're going to talk about at the end of the meeting around federal funding and what the progress is and how things are going with the sign-on letter and the current strategy. We'll also have a quick briefing from Alvina Condon at National Capacity. She's gotten some recent information about housing counselor certification, helpful little pieces to understand and know as we learn more. But we're going to devote most of the call to the new mortgage product, which has just been released. It's a joint project of Bank of America, Freddie Mac, and Self-Help. And it's a 3% down product, which requires counseling. There's a great deal more to say about it. And I'm really pleased to say that we have a couple people who are been deeply involved in the affordable housing field for a long time who are going to provide us with a briefing. So one is Kathy Cummings from Bank of America, who many of you know from all the good work she has done in helping counseling groups get up to speed and access the mortgage products. And Mike Calhoun is to join us from CRL, from Center for Responsible Lending. He helped facilitate the deal, though, and works closely with the self-help people. And Matthew, any sign if Mike has been able to join us yet?
Yeah, hopefully Mike can.
Yes, I'm trying to get on.
Okay, we can hear you, but we're getting a little bit of feedback there. That's better.
Is that better? I was a little confused at first because it said I was.
Are you able to call in, Mike?
Let me try calling in on a different number. I'll call right back.
Okay, great. All right, good. Okay, well, so maybe we'll start with a quick intro from Kathy Cummings. Kathy, are you there?
Yes, I am.
Okay, so do you want to give a quick overview of the product, and then we'll patch Mike in to give us the context?
Yes, absolutely. So thank you, Bruce. Really appreciate the opportunity to deliver our much-awaited announcement that we're introducing an affordable program to the market in an effort to assist credit-worthy low and moderate income homebuyers. So my name is Kathy Cummings, and I'm the Homeownership Solutions and Education Executive. And I'm joined today, or will be joined hopefully, by Dottie Sheffick, who is the Affordable Housing and Strategic Relationships Executive. And she's also my partner within Neighborhood Lending.
Is that connection better?
And I've had the opportunity to work with many of you through our Connect to Own pre-purchase homebuyer education program. So I thank you for taking the time today to join us. And as you may be aware, Bank of America is committed to lending and supporting both low to moderate income borrowers and underserved communities. And I just want to throw out a couple of numbers because this usually surprises people, but we do really strong lending in our communities. We've got 31% of our 2015 volume was originated to low to moderate income borrowers and 32% to multicultural borrowers. So certainly a focus for Bank of America. Our new affordable lending program is called Affordable Loan Solution. And it's a unique partnership with Self-Help Ventures Fund and Freddie Mac, offering up to 97% loan-to-value, and we can go up to 103% combined loan-to-value when a Community Second program is used. And this program will be available through all Bank of America mortgage sales channels, including our 4,700 financial centers. We will immediately sell the loans, including the servicing rights, to Self-Help. Now, as you know, Bank of America is committed to successful home ownership, and as such, we will require pre-purchase homebuyer education for all first-time homebuyers. And additionally, there will be early intervention by Self-Help should a borrower fall behind on their mortgage payment. And we really feel that this is a best practice for sustainable home ownership. Some of the program features include the loan amount will go up to $417,000 for home buyers who are up to 100% of the area median income, and border income is allowed on this program. This is an owner-occupied single-family purchase program, and it does require as little as 3% down that can come from flexible sources such as affordable seconds, grants, or cash on hand. The credit score requirement is at least 660. However, non-traditional credit may be considered. This program also has no reserve requirements, and because of the unique relationship with self-help, there is no private mortgage insurance payment. There will be 43% debt-to-income ratio, and the program has lower monthly payments than a similarly situated FHA borrower. So what we're asking for is your partnership to help prepare potential clients for homeownership by providing comprehensive housing counseling. Should you wish to get more information or find out how to partner with a Bank of America loan officer, please email us at homebuyereducation@bankofamerica.com. That's homebuyereducation@bankofamerica.com. Now, it looks like Dottie has joined the call, so I would like to now, before we take questions, turn it over to Dottie, who's going to provide you an update on the Down Payment Resource Center, and then we can open it up for questions.
Okay, Kathy, just quickly, we'll also want to have Mike say a few words as well. So maybe Dottie goes first, and then we'll have Mike come in on the context of the new product.
Okay, that sounds good.
Good. Okay.
All right, thank you. Thank you very much, Kathy and Bruce. So what I wanted to talk about today is a new website, and I don't think that we have a screen print of it, but if you happen to be sitting at a computer, you can put into Google Bank of America Down Payment Resource Center, and it'll pop up, and you can go right into that website. And it's a consumer-facing website, so it's available to all consumers, all nonprofit groups, all those that are providing homebuyer education, and mortgage loan officers. It's available to anybody who sits down at their computer and is interested in knowing if there's any help available to them in their specific geography. So if you're a first-time homebuyer and you're sitting in St. Louis or Chicago or Seattle or wherever it might be, and you go into the Bank of America's Down Payment Resource Center, you can enter in that city and push the button, and what comes up is a list of programs. And as people in the business, we tend to have a little bit of an understanding about the difference between down payment assistance, grants that are simply grants or maybe forgiven over time, employer-assisted housing. We have some knowledge of perhaps below market sales prices for inclusionary zoning, but that's just way too complex for a consumer, a first-time home buyer, to understand. So they'll get the name of the program and just a short description of what it has to offer. Is it a second mortgage at a low interest rate, or is it a below market sales price? Is it available only to first-time home buyers? That sort of thing. So they'll get a brief description of the program, and then they're going to probably rely on you, or they'll rely on somebody else to give them the entire description and whether or not they'd be eligible for that program. So the whole intent of the website is to give information, to give it with some clarity, to simplify the process, and to make sure that we are working with all of our partners on sustainable home ownership, really by expanding the number of borrowers that can qualify using these programs offered by employers, housing agencies, nonprofits. So that's it. I'm starting to connect, so glad I'm done.
Can I just jump in? Mike, the problem is that you're connected through your computers, mic and speakers, and on the phone, I think is why we're getting the feedback. If you're able to, there should be an audio tab in the GoToWebinar control panel, and if you don't see it, you just need to click there should be an orange arrow that will open up the control panel, and there's the option to choose either telephone or mic and speakers. Hopefully, if you click on telephone, that'll turn off your computer mic, and Okay, it looks like we're getting you switched over. Hopefully we'll have Mike in 1 second.
Good.
Let me ask
I'm sorry, just one last bit of instruction. So Mike, you should have an audio pin that you just need to put in for the telephone line to open up.
Is that what you wanted to cover, Kathy, today?
Yes, it is, and I think it's a great way for our nonprofit partners to also identify which programs are supported through Bank of America. So we're excited about the website, the Down Payment Resource Center, as well as what programs can be layered to work with the Affordable Loan Solution. So thank you, Dottie. I appreciate your help.
Sure thing. Thank you.
I think we have Mike now.
Yes, that's
Mike, are you with us?
I apologize for the feedback there.
Great. We can hear you now, Mike. So do you want to give us sort of the big picture of the Affordable Loan Solution mortgage?
Certainly, and start by our thanks to Bank of America for stepping up to launch this program. It's available right now, and loans are coming in at an encouraging pace already. So we're very pleased with the structure of the program and with Bank of America getting it operationally so quickly. So as many may know, Self-Help operated a similar program from the mid-90s up until 2008 when the GSEs went into conservatorship, and the basic philosophy was the same, with the overall goal of expanding the envelope of loans that could be made readily available to low and moderate income home buyers, and to combine the network reach that banks like Bank of America have with retail offices across the country. I think this is available in almost 5,000 retail branches, and then also provide the financial leverage that involvement of the GSEs provides. Similar to what we did before, we would buy loans from banks that did not meet existing GSE requirements, and these loans would be included in that, or have conditions that are more favorable for borrowers than the other programs that are currently offered. And Self-Help would buy the loans from the banks and then get a guarantee. There's a slight difference in the guarantee that we got before with this one. And from the GSEs, which make the loans liquid so that we can leverage the financing of the program. But both cases we're putting up Self-Help capital in a first loss position on the loans. We are comfortable that the loans will perform quite well, and that's based in part not just on our lending to these borrowers, which goes back to the early 1980s, but also we got sort of the asset stress test through the financial crisis, where we had about $5 billion of these loans outstanding, where for those loans we had 100% of the credit risk spread across 48 states, and we had losses for sure, although in our view most of those losses were from collateral effects of the Great Recession. The loans were all 30-year fixed rate, fully documented loans, just as these will be, with affordable payments and no payment shock, full escrow, etc., and with additional high-touch servicing for the times when borrowers fell into delinquency. Those loans, we had losses through the crisis of under 4% on those loans, and those were the average LTV was 97% on those loans. The average household income was well below $35,000. And even given those circumstances, about half those loans went to families of color. Those loans still perform very well through the crisis. So we have confidence, particularly with a partner like B of A, who will be doing the actual underwriting of these loans, and people will come through both the counseling will be, as we can talk more about this, coming through their Connect-to-Own, and the underwriting will be done by their personnel at their offices. But that's what we're trying to do, and as I have said in previous conversations, in some ways it's frustrating that we feel like we have to keep making the case that well underwritten loans to low and moderate income households with low or modest down payments will perform well. But I think post-crisis we are in that situation again, and we look forward to this program both helping significant numbers of home buyers, but also once again demonstrating that this lending is both crucial and sustainable. So maybe if that's helpful background, I can stop there and answer questions. But again, thanks to B of A, and excellent to have you on, Kathy, to explain from B of A's side. So we're very excited about the program, and as I said, it already is getting encouraging pickup.
Okay, so really quickly, so we've got a 97% product, counseling is required, 660 or higher credit score. How do counseling agencies engage with this? How do they get involved?
Thank you for that question. So as you know, we have the Connect-to-Own program, which is our fee-for-service homebuyer education program. And we have 2 online programs available as well, which is Framework and eHome America. So any housing counseling agency that provides pre-purchase homebuyer education that's adopted the national industry standards and is HUD approved is eligible to participate in the program. If they're not already a Connect-to-Own partner, we encourage them to sign up with us. Again, our email address that we can be reached at is homebuyereducation@bankofamerica.com. You can send a request to that mailbox. That's a manned mailbox, and we'll get back with you. It's a fairly easy process. We just go through a short assessment, make sure that we get your 501c3 documents, etc., and we can get you signed up. And then that enables us to pay the $300 fee for service. And that is for any application that comes into Bank of America that's decisioned. So once it's decisioned, whether it's approved, denied, withdrawn, or canceled, then we can go ahead and pay that fee for service.
So, Kathy, one of the things is that the eHome and the Framework programs are really education programs rather than counseling programs. Mm-hmm. Is that enough, or do people, or is there really a counseling requirement for everybody?
Our requirement is if you do use eHome America or Framework that you offer at least 1 hour of face-to-face or phone to meet the HUD requirements. Okay, our preference, of course, is the face-to-face, but that is an option for those where it just won't work from a schedule or proximity perspective.
Okay. So, Matthew, are there questions in the queue?
Yes, there are. I think we just answered the first one, which was trying to get into kind of whether there are any time requirements in terms of the number of hours of. How about for the in-person? Are there any requirements?
Yeah, so it's the national industry standards, and I will say it's typically an 8-hour course, but there is, as long as you're hitting the major components of pre-purchase homebuyer education, then it's acceptable.
And is there going to be some sort of a certificate, or how is the counseling that is verified that it's been done?
Yes, we do need a certificate of completion that's issued by the Housing Counseling Agency. And once we get that, that lets us know that, first of all, the homebuyer education requirement has been met, and it's also the trigger to enable us to pay for the counseling.
All right, thanks. Are there any income requirements for the product?
It's 100% of the area median income. So
Okay.
whatever your area median income is, it's 100% of that.
By county.
Okay.
By county. Mm-hmm.
And then the person asked if there are income requirements, would they be waived for someone purchasing in a low to moderate income area?
No.
Okay. This person's got a bunch of questions. Do you have to be a first-time home buyer?
You do not have to be a first-time home buyer. I don't believe. Do you, Dottie?
No, you don't have to be a first-time home buyer.
That's correct.
But it's not. You must be a home buyer. This is not a refi program. This is a purchase program.
That was the next question, is whether you can refi into it. All right.
No.
Someone asked whether nonprofit DPA information can be added to the Resource Center website. Not positive.
So the down payment, Bank of America's Down Payment Resource Center does include nonprofit groups that are providing some type of down payment or closing cost assistance or grant. To geocode the nonprofit groups that are Connect to Own partners is on our list for future enhancements.
Great.
It sounds like maybe someone was writing that they have a program or access to a program that's not in there, and if so, they should reach out to B of A and see if we can't get it in.
Absolutely.
Yeah, Dottie, do you want to give your email address,
Sure.
your mailbox?
Sure. It's my name, DOTTIE .Shepik, and that's spelled SHEPP as in Paul, ICK @bankofamerica.com. If you offer a program and you don't see it on our website, just let me know, and hopefully we can get it approved and on there.
Great. And Dottie, could you also please repeat the Resource Center's website?
Sure. It's Bank of America Down Payment Resource Center.
Great. And .com?
Yes.
All right. And we can circulate that after the call as well. Someone asked what the middle credit score requirement is for the program.
Well, the 660 is the credit score, and Dottie, I'm not sure if it's the 660 is the middle that's taken, or do you happen to know?
Yeah, I don't know. I'm sorry, I don't know. From an underwriter perspective, I would imagine the 660 is the minimum for all borrowers.
Mm-hmm.
They use the middle of the 3 scores and the lower of 2 scores.
Okay,
Correct.
there you go.
Following the GSE guideline with a tri-merge bureau.
Great, thank you. So there's a couple related questions. First is whether there's any wait time after a bankruptcy, foreclosure, or short sale for the program.
As far as I know, that's standard underwriting.
Yeah, and we do have standard wait periods for bankruptcy or foreclosure. And the best thing to do is to reach out and discuss it with a mortgage loan officer.
Great. And then somebody else had asked whether the Back to Work program, which I assume everyone's familiar with, but it was kind of shortened the time for folks that had a financial hardship during the crisis to be eligible. I think, Bruce, that was for FHA loans. Is that right?
Exactly, yeah.
Yeah.
Someone asked whether, sorry, go ahead.
No, that is an FHA program, and we do not offer that program.
Right. So there'd be no overlap between Back to Work and this product, correct?
No. Mm-mm.
All right. Sorry, I'm just many questions to go through.
Loan amount, I don't know if that's covered. 417.
Mm-hmm.
Someone asked if essentially the major difference between this product and FHA is that there's no PMI required with this product. Is that essentially right, or is there other?
Other than 3% versus 3.5% down, no PMI. Dottie, any other things that you can think of as far as
you know, I will say this because you know there is a recourse fee that is included in the rate, but it does not. From every comparison I've done, and I've done a lot of them, the payment is lower to the borrower. So that is the primary you know, advantage to Affordable Loan Solutions versus FHA, where that MIP is on there and will stay for the life of the loan.
Great, thank you. Someone else asked if the product is available for deed-restricted properties.
Yes, it is.
Great. And if you could just repeat, the minimum credit score is 660, correct?
correct?
All right. Oh, someone asked about the interest rate for these loans.
You're going to see the interest rate's going to be a little bit higher than it would be on an FHA or conventional. But again, if you did a side-by-side comparison using a point and eighth, whatever that add-on might be for conventional mortgage insurance, the payment to the borrower will be lower.
Okay.
So, for example, I got a quote today for 680 FICO with no discount points will be a 4.75% rate. Again, including effectively the cost of either FHA or private mortgage insurance. So
all right, thank you.
fares lower than those.
All right. So someone asked in the materials, it says there are no reserve funds required in most situations. They asked what a situation would be where there would need to be reserves, and they just said in there, as they're counseling folks, they always encourage reserves or emergency savings. But can you elaborate on what a situation might be where?
Sure, and yeah, absolutely. Because you know, I completely agree with that sentiment because stuff happens, right? So I prefer to see reserves. However, you know, I would say that for compensating factors. If you don't have anything that's a compensating factor or you're pushing the limits as far as a low FICO, high LTV, then they may have some reserve requirements, but for the most part, the reserve requirements are waived for this product.
Great, thanks. Someone asked how the counseling agency will know if the application's been decisioned. Do they have to follow up with the loan originator, or does the mortgage officer let the counseling agency know?
Well, you know, hopefully they have that relationship where they would know from either the borrower or from the housing or from the mortgage loan officer. However, the email address that I gave you, the homebuyereducation@bankofamerica.com, we can certainly verify that and track that for you.
Okay. All right. Is there a list of agencies? You have a list of agencies that are already partners to provide counseling.
Not printed externally. It's something that we're hoping to get into the Down Payment Resource Center, but we don't have anything external that's available.
All right. And is there any?
But I mean, I think maybe part of the motive behind that question is can other agencies get in on the list?
Absolutely, yes. If you don't know if you're a Connect-to-Own partner or not, please email us. Again, it's homebuyereducation@bankofamerica.com. If you're not approved under the Connect-to-Own program and would like to participate, we can certainly get you set up, providing that you are a HUD-approved housing counseling agency and have adopted the national industry standards.
Great. And is there any cost to become a partner?
Absolutely not. We get to pay you. That's right. The good news.
That's great. Someone asked specifically about whether this program will be available in Hawaii. I don't know if there's aren't B of A branches there, but someone else asked how the product might be available if there's no B of A's in the area.
Yeah, so this is available through our centralized sales as well. So if there was a web application, or if they went through the call center that you can find at bankofamerica.com/mortgage, you would be able to find someone to be able to offer it.
Great. Someone else asked just to clarify, is the counseling requirement online plus a 1-hour face-to-face or over the phone session, or is it either or? So
it is.
You can just elaborate on.
Sure, absolutely. It's either the standard pre-purchase homebuyer education that you would have had to receive your approval from HUD to offer. So it's either that, which is the face-to-face or classroom, or you can do the online plus 1 hour of face-to-face or teleconference.
All right. Is the median income based on family size?
No, the median income, you can actually find the median income by going to Freddie Mac's website. They have, under their single family doing business with Freddie Mac tab, there's an income eligibility tool, and you just put in the state, and all the counties will be listed with the income limit, and that is the income limit that we will be using for the product. Somebody asked about Hawaii. I looked up Honolulu. The income limit is $86,900 in Honolulu.
Wow. Great. Sorry, was someone else going to jump in? Okay. We have plenty more questions, so we'll keep going, and I'm sure we're not going to get to them all, so I'll apologize if we don't get to your question. We'll just cover as many as we can. So is this only for single families, no condos or townhouses? And
so condos, townhouses are acceptable, but no co-ops.
Okay.
What about 2- and 3-unit buildings?
No.
All right.
That's an important issue, especially up in the Northeast. I think worth taking a second look at that.
Can the home buyer own another home? Does it need to be their only home?
I believe it needs to be their. They cannot own any other home at the time of closing. Is that correct, Dottie?
It is. It says, you know, if they do have an ownership interest in another property at the time of application, it has to have been sold and all obligations satisfied prior to closing the subject loan.
And it needs to be owner occupied, I'm assuming?
Yes.
Absolutely.
Let's see.
So while we're waiting, let me just ask a question about the non-traditional credit. So if you've got a 660 credit score minimum, you pretty much don't have, non-traditional doesn't really apply at that point. I mean, non-traditional you kind of use when you don't. So is there some non-traditional that lets you go lower on the credit score, or what's the thinking there?
So if you don't have enough credit history in order to create a credit score, then you can use non-traditional.
So basically, if you have no credit score, that's the place where.
Yeah, I know that there's a minimum trade line requirement associated with the 660 FICO. Dottie, is that like 3? Is that what it is?
I recall it's 3. Yeah, I'm not 100% sure on that, but I think it's 3, and I'll look it up while we're talking.
Okay.
Well, if you're saying that if you have 2, then you could use alternative credit, and your actual credit score might be quite low, but if alternative credit comes together, then you could be a candidate. Is that? Am I summarizing this correctly or not?
Yeah, no, the minimum credit score is 660. If they do not have a valid or usable credit score, and let me see, a minimum of 2 credit scores are required for each applicant. So If it was because of thin file, in other words, they had a line of credit but it did not produce a credit score, then they could use the non-traditional credit.
All right.
Well, I mean, just to think about, just as the policy issue here, or the underwriting issue, is that sort of where we find this issue the most commonly is where people have a thin credit file, but they have a credit score, and where you then figure out, are they paying their rent on time, but their rent's not showing up on the credit score, and are they paying utilities on time? And you package the place that way, and it'd be worth exploring. And Bank of America used to do this in the old programs that I thought had a lot of success, so worth thinking about.
Yep, agree.
Someone had asked for the agency, so for the housing counseling agency, so they get the $300 fee paid through the program. Is there any way that they can collect additional fees, or are they strictly limited to that the $300 that gets paid through the program?
You know, it's whatever they work out with their HUD rep. So HUD really dictates what they can and can't charge, right? So this is just an additional fee for service. And one of the requirements, I do want to make sure that I'm pointing this out, is we, of course, are very concerned with any RESPA violations. So we do not want to be your only lender that you work with. You've got to do what's best for the customer at the end of the day. Obviously, we want your business, but you know, whatever's best for the customer. So we don't want to have an exclusive relationship with you. And if you do mention product, and if you do mention this particular product to a customer, the requirements from HUD is that you talk to them at least about 3 different lenders. So, you know, you just need to be prepared for that. We don't want a situation where somebody feels like they're being steered to Bank of America.
I think that's important to point out, and obviously very important for agencies to stay within the HUD guidelines. A number of people have just asked if you all could circulate the kind of program guidelines, I think especially the underwriting guidelines in particular. Is that something you can share with us so we can get out to folks?
Unfortunately, we're not able to get our underwriting guidelines printed externally. But one of the things that we will be doing, and Bruce, I think we made you aware of this, is we're going to have some additional webinars. This particular session, your webinar came up pretty quick, and we don't have our materials approved as of yet, so we don't have anything we can send out as of right now. But we will have a presentation deck that we're trying to get approved for the Bank of America webinars that are coming up. So as an example, one of the ones that we're hosting is March 24th. And you know, if you didn't get all your questions answered today, we encourage you to join back, and we will have a deck that will go with that presentation.
And I know that Mike does need to drop off it in just about 2 minutes, so we're definitely not going to get to all the questions that were asked. A few people have asked if we could just recap the email addresses and websites that have come up. Could we maybe just run through those before
Well, why don't we actually, instead of using the time on that, we will send that out after the call, and then people will have it written. But I would suggest we try to do as many questions as we can, and maybe we'll go for another 5 minutes. And if Mike, do you have any closing comments you'd like to make?
No, when we answer people's questions again, just really appreciate all of the interest in this and the good work the B of A is doing launching it.
Great, thank you.
Good, thanks, Mike, for all your good work here. So why don't we take another 5 minutes of questions and cover as much ground, and we will get the contact information out to people.
All right.
Thanks so much for giving us this opportunity to talk to the program.
Glad to.
Thank you, Mike.
Thanks.
All right, so is it desktop or manual underwriting?
It is manual underwriting.
Right. Someone wasn't sure, did you say that the debt-to-income limitation on the front end is 33%? Is that right?
The back end is 43%. Dottie, is there a max on the front end?
No, it's a single ratio at 43.
Yep.
Just following up, I guess, on a previous question. This person said they'd asked about using family size with the area median income. They said that you normally do, and was just wondering why it's different for this product.
Well, Freddie Mac is ultimately buying the loan, and they set the requirement for the area median income. So that's why Dottie pointed you to their website to find out what it is, but they get to dictate what we do.
All right. Someone was asking about how the payment to the counseling agency works. Is that something that is kind of happens automatically, or does there need to be an invoice?
Well, it can work either way. So if the mortgage loan officer appropriately tags the file with the correct homebuyer education provider, and that goes through the process, then we can cut the check automatically at closing. But if that does not happen the way it's supposed to in a perfect world, then certainly we do accept invoices for payment. We just need to do the validation that we received the loan application and that the loan's been decisioned.
All right. And is there, are payments like periodic? Is there, how does the timing work of the payments?
It's whenever we are able to do the validation. If it's automatic, then it is paid at closing. If the loan was canceled, denied, withdrawn, and did not go to closing, then we would need to get an invoice. And as long as we have the certificate of completion and validate that we received the application and that the loan has been decisioned, we can go ahead and process the payment.
All right. Someone asked whether there will be Fannie Freddie type condo requirements. I think specifically they're saying owner occupancy ratios.
It's the standard, yes, it's the standard underwriting for condo approval.
Okay. And these are ultimately being sold to Freddie, so are really all Freddie requirements are in effect here. Is that correct, or?
Yes.
I think we may have covered this. I'm sorry. I'm trying to sort through questions as we go, so I apologize if we've covered this in depth. But someone asked about non-traditional credit. So is non-traditional credit acceptable? Is the exact question?
Yes, it is.
All right. I think we've covered most of the questions that we have here.
Okay, so let's ask quickly on border income. How do you, is there a form, or how do you document that? How should counselors treat it?
You know, that's really an underwriting question, and I don't have the answer to. I don't know if you know, Dottie, or not.
I have a couple of the requirements. The person providing the rental income, they must have resided together for at least a year and intend to continue residing together in the new resident. The person who's providing the rental income must provide appropriate documentation to evidence the residency, you know, things like their driver's license, their bank statements going to that address, so that, you know, it shows that it is the same as the applicant. They have to have been paying at least 12 months on a regular basis as well. Pretty much what you would expect to see in border income.
Good. All right. Well, thank you very much. This has been terrific. We're very interested to see how it plays out. We are, oh, actually, one more quick question for you. Is there any limitation on when the counseling can occur? So one of the concerns we have is that counseling occurs late in the process rather than early. So we always think counseling is best before you've made application. How do you fit in with that?
Yeah, so the counseling certificate cannot be more than 1 year past the, or 1 year prior to the closing date, but it does have to be completed before closing.
But not before application?
Not before application.
All right. Well, thank you very much. This is all pretty exciting. We're very interested. We'd love to maybe touch base later in the year to see how things are going. Certainly let us know about when you have the training, and we'll let people know about that as well, and we'll get the contact information out. Thank you, Dottie and Kathy. Great.
Thank you. Bye-bye.
All right. Good. All right. Well, let's flip over to, is Alvina available? Who everybody knows National Capacity as being the Asian Pacific Islander organization, which is doing terrific work in the field. They've certainly learned a lot. They've certainly informed quite a few of our discussions, especially the work around language access. And we've had Jane Duong on previous sessions. But Alvina had some intelligence on the certification program, and I thought she could share with us. Alvina, are you there?
Yeah. Can you hear me?
Oh, good. Beautifully.
Okay, great. So like Bruce mentioned, I am Alvina Condon, Housing Program Coordinator with the National Coalition for Asian Pacific American Community Development. We are headquartered in Washington, D.C., but I work out of the Oakland, California office. Early February, we had a convening for our Housing Counseling Network, and we were able to have Gerald Mayer from HUD to come give us some updates, and he gave us some new information on the housing counseling certification. I believe I sent that out on the listserv a few weeks ago, but I'll just go over all of them and add what details I do have. So the first item is that the exam will most likely roll out on HUDhousingcounselor.com, hopefully sometime this year in 2016. There will be a study guide and a practice exam that will be much like a state driver's license exam. And Jerry mentioned that if a person can pass the practice exam, that they would have no trouble with the actual exam. The fee will be nominal, and agencies can use HUD housing counseling funds to pay for the counselor fees. And then also there will be no continuing education requirements that are specific with this certification, though there are other, there may be other HUD requirements, related to monitoring and continued education, but it is not specific to this certification. The fifth thing would be that you can take the test as many times as you want, but you would have to pay the fee each time, and there's no waiting period between each test, so you can take it again, as soon as you'd like. And the last thing would be that the exam should be available online and also at testing centers in major cities, and both versions of the test will be proctored. So if you do the test online, the participant will have to hold up like a driver's license or an ID to the camera to verify your identity, and even the online version will be proctored by a live person. So that's all I have.
Well, that's actually very helpful, and that's new information, little pieces that trickle out. It gives you some sense of a lot of the deep thinking they're doing on this. So this is great. Thank you so much.
Thank you.
Good. Okay, so Matthew, a lot of stuff going on around federal funding. What's the latest?
All right, so this week, yesterday, we sent our sign-on letter to all the members of Congress. We had a much shorter time frame for people to sign on than we have in the past. In the past, we've had 2 weeks or so. It was just a shorter time frame this year, so we had just exactly a week for folks to sign on, and really did a great job given that time constraint. We had nearly 350 different agencies signed on. We had almost every state represented. We were missing a few, but had just about every state represented. We asked for $60 million for HUD housing counseling, which would be an increase of $13 million, so about a 30% increase from the current funding level, which is $47 million. And we asked them to keep funding for the NFMC program level at $40 million. So that together that would represent about $100 million for counseling, which would be a slight increase from the current of $87 million. I think so. We sent those letters in yesterday. We had a good response. We had also before sending the letters, we had done a special outreach to groups in some of the more most important districts. In particular, Congressman Rogers, who's in Eastern Kentucky, and is the chairman of the House Appropriations Committee. And we had a great showing from Eastern Kentucky and from Kentucky as a whole. Also with Florida and South Florida in particular, because of Congressman Diaz-Balart, who's the chair of the THUD subcommittee. So we did a good job getting groups, local groups signed on from the most critical districts, especially in the House. So I don't think I yet said thank you to all the groups that signed on. Really, it was a quick turnaround, and a lot of you came through, and we really appreciate that. And it really goes a long way in making the letter that much more impactful. So we're working now with Congressman Conyers in the House. He's going to be circulating a letter asking House members to sign on, asking for $60 million for HUD housing counseling. I think he may also include the $40 million for the National Foreclosure Mitigation Counseling. We're also working with Senator Menendez on getting a letter circulated in the Senate. So that's the kind of behind-the-scenes things that's happening with Congress right now. I think the next thing that would be helpful for folks on the call to do would be by following up by signing on to the letter, by making a phone call to your members of Congress. And it doesn't need to be a lot. You can just say, housing counseling funding, federal funding for housing counseling is critical to making sure that we're able to meet the need for counseling services in the district or in the state, and would really encourage you to sign on to sign on to the letter that's being circulated in the House or the Senate to show your support for housing counseling funding. So I think reinforcing the letter that we sent with that message would be very important. I think that's all for now. Bruce, I don't know if you want to add anything on the funding.
Yeah, no, I think you've just nailed it. I mean, these program requests that the House and Senate people make are what influence the next step in the process. Obviously, we're doing a special emphasis on some key votes, but you're reaching out today to the local office to get them to put housing counseling on the list. We pretty much know it won't happen unless groups locally are asking for it. And we're certainly getting Republican support on this, which is very, very important. Do think about not just contacting the Democrats in your area, but in your service area, so not where your office is located, but where your clients are coming from. If you get clients from the suburbs and from rural areas, and those are represented by Republicans, this is the time right now to ask them to put the request in, and that's built into. Matthew put this all in the letter, so you can just take the language that's on the sign-on letter. You can just take that language and email it to them and ask them to include that. Do it as a phone call, however you think it's appropriate. But right now, and actually, tell Matthew what the intel is, what you're learning from your local people, because we'll pick up relationships from that, and where somebody's saying yes, that's great. If somebody's saying no, not in your life, we want to know that as well. So I think we're getting a very good response, so we're making some headway. So very good.
Sorry, I'm just got a couple of questions, comments coming in.
Okay.
So yeah, someone just asked for a script for contacting Congress, which I'll be happy to put some talking points together. And I was responding to a question, so kind of missed what Bruce was saying, but I think one of the other important things ways to frame the need for counseling funding. I mean, so we're asking for an increase for HUD housing counseling at a time when it's kind of increases are kind of tough to come by. But I think framing it in terms of first, that program is down from $87.5 million in 2010 to $47 million now, so pretty close to a 50% reduction from where we were just a few years ago. And the NFMC program is being steadily wound down. So the total pool of funding for housing counseling has declined significantly, and below it's insufficient at the moment. And President Obama's request of only $47 million for HUD housing counseling, which would be 45% cut from these already, very diminished amounts of federal funding for counseling, would be catastrophic for counseling agencies, and just would not allow us to be able to meet the need for our services in their districts and in their states. So I'll put together some talking points that I'll circulate to everyone, but I think that's an important thing to keep in mind when you're talking to folks.
Good. Okay, well, thank you so much. Thank you, everybody, for the good work that you're doing out there. We are going to have to keep the pedal to the metal, as they say, on this. This would be we did quite well last year because we were very focused, and we need to do it again this year. I hate to say it, but this may be the continuation for our lifetimes of each year with a struggle on the funding, but it's a piece of the pie. So we've got to make it happen. Just to give you some sense of things coming up in the future, we've had this conversation about the racial wealth gap in the country and the role of home ownership. On the April 7th Leaders Call, we'll have Lisa Rice from the National Fair Housing Alliance talking about credit scores and how credit scores have played out in communities of color. A very interesting set of insights she's got and conclusions that will be worth knowing about. We plan to have Jim Carr, who used to be the head of research at Fannie Mae and is a prominent researcher in the field. Was at Center of American Progress, now teaching in Michigan, as well as doing a number of consulting programs. He's thought deeply about these questions and has been putting together a paper, and will give us that in early May, which we think will be kind of a high impact piece as well. We're always sort of looking for opportunity, product, and innovation, so let me know about other things you think we should be interested in. The other thing is, so it's 2016, and we hope that if you haven't joined NHRC, that you join. There's a lot of work we're going to continue doing. We really do want to kind of keep you informed on the edge. Members will get notices about unique funding opportunities. We did a series of webinars on HUD compliance last year, which we're trying to think of what other webinars might be useful along those lines. You get access to the foundation directory and to our escalation guides for servicers, escalation contacts, and the Federal Home Loan Bank, down payment assistance. There's a lot of things that you get as membership benefits that are resources that are in the piece. But really, I mean, the real reason that people join and why organizations have joined is that we're really moving the cause forward. About a quarter of our budget comes from membership dues, provides us with the kind of flexibility that we can do what we do, and we'd be really helpful to get to a point where we can add another staff person, because we are pretty swamped, and that's why we haven't been quite as responsive as we have been in the past, because there's a fire hose of stuff coming at us. But we are very, very interested in building the industry. We think there's a lot more that can be done. There's a lot of opportunity. You're a big part of that. We want to find out what you're doing locally that we can elevate, and let's figure out what we can do to make your work easier through the work of public policy. And interestingly enough, just involved in a meeting with Director Cordray at CFPB this morning, where issues around getting contact information from counseling agents, from servicers to counseling agencies, and getting that information so that you can market directly to people who are delinquent and help get them into the best program possible. That's been a stumbling block. The lawyers at the servicers say they can't do it. Gargery understood this right away and was very interested in. We'll bring this up with others in the government, and will and said he'll try to help working towards a solution. This is the great stuff we can all do if if the information flow goes well between us and we can keep this work going. So anyways, join NHRC. Very large organizations, $5,000 a year, $2,500 for large organizations, $500, and $250 for smaller organizations. But this is part of what makes us tick, as you all well know. All right, well, that's we've run out of time. So March 17th, we'll have our next call. I'm eager to talk with you then, and keep up the good work. Thanks. Bye.